All right, folks, once again, want to thank everybody for joining today for our webinar entitled Improving Franchisee Compliance with Qvinci. My name is Richard Madison. I'm an account executive with Qvinci. I'll be your host today. And as we go through the webinar, if you have any questions, want to encourage you to go ahead and use the chat box. I do have some of my colleagues manning that box. They'll be able to answer your questions. As always, we will have Q&A at the end, but if a question comes up during the webinar, feel free to go ahead and ask, and we'll get it answered for you as we go. And just as a bit of housekeeping, wanted to make everybody aware of a couple of upcoming webinars that we have. July 6th, we are running our Qvinci 101 for franchises. It's an introduction to Qvinci. If you're already using the solution, it's a great refresher, especially with some of the new features that we've added and some of the features that we've improved on. Following that, July 20th, we will have a how-to webinar, and this one will be how to use the properties and permissions within Qvinci. Now, the reason why I put up this slide is that this list of clients are Qvinci customers, and what this shows is that Qvinci works across all different industries. It doesn't matter if it's a cleaning and restoration business, a quick serve restaurant. It could be a school. It can be a diocese. We are really a solution that fits not only just the franchise space, but anywhere where you would find multiple locations and a need to automate, consolidate, and report from those multiple locations. So today's agenda, we're going to first take a look, give you an overview of Qvinci, give a quick technology overview, and then we're going to jump into the compliance piece. We'll talk at a high level about why compliance is so important, and that's compliance to a franchise system. Why non-compliance is bad and some of the indicators there of non-compliance, how you can facilitate compliance whether you are just starting your franchise system or whether you've been doing it for years, and then we'll get down into how compliance fits with financial reporting requirements and essentially where Qvinci fits in that particular space. We'll take a quick look at an FDD and how some things you can use Qvinci for to build a better FDD, how Qvinci can foster that compliance, and some benefits that we can provide, some key features, and then we will go ahead and get to the Q&A. So about Qvinci, we were founded in 2007, and we were basically created as a reporting solution to fill in gaps that your accounting system couldn't provide for you. We were a reporting add-on for QuickBooks, and in 2011 we actually became the recommended reporting solution for Intuit's franchise program. And building from that partnership, we've actually become now one of the top-rated reporting apps in the Intuit App Store. And last year we were awarded the first of hopefully many patents in our consolidation and mapping technology. So in a nutshell, Qvinci was designed to plug gaps in your accounting software. And generally what we do is we automate what used to be a manual, error-prone, time-consuming and resource-intensive process. And that is the consolidation of financial information from multiple locations, and then being able to then give you data that is ripe for analysis and ready for you to move forward. It's an actionable system, and so from there, in automating this, we can save you time, save you resources. Automation automatically by itself is going to be more accurate and improve efficiency. And with the improved accuracy of the data, you reduce risk to your franchise system. As you see at the bottom of this slide, you see Xero as an accounting system, QuickBooks obviously, Excel and MYOB, and that's to show that Qvinci can link and sync with really any accounting system that's out there, whether you're using a flavor of QuickBooks. We work with Enterprise, with Desktop, with Online. We work with Xero. We work with MYOB. We can also do a manual sync with Excel. So if you haven't utilized what's out there from a technology standpoint as yet, and are still doing some accounting on Excel, we can still link and sync, and you can still take advantage of Qvinci. So we're going to jump right in as far as compliance with the franchise system, and why compliance is so important. And from a high level, for a brand to be successful, you want everybody aligned to the same goals and aligned to the same vision. And the franchise system as a whole has been called confrontational at its very core. And there's really nothing wrong with a little bit of healthy confrontation, so long as it's managed effectively. But if we really boil it down, when you're looking at it from a franchisor and franchisee perspective, the franchisor is trying to build their brand and to make their brand as a whole successful, and essentially grow their brand. A franchisee is looking to have their own business, something they own, and maybe move to financial independence, working for themselves. But when you boil those two things down, they actually are both aligning to the same goals. Both are gearing towards growth. And so from the standpoint of growing your business or even growing your brand, at its core, really, the franchise system is not confrontational. They are aligned at the beginning. Now, a consistent brand experience requires standards, including financial standards. And what we mean by that is there's going to be checks in place. And if you have we'll explore this more when we talk about the FTD, but with a strong FTD, one of the things that you outline is what is required for compliance, what those reporting requirements are, and where essentially we'll show you where Qvinci fits there, but also what are the negative implications of not complying, and how it affects everybody in the system. Non-compliance of one franchisee can actually hurt the whole system, and by that I mean, say for example you have a couple of outliers in your system, and they're not complying with the reporting piece. They don't provide regular updates to the reporting, and so what that does is that actually skews the information that you have that you're putting in your FTD, and in skewing that information, you may be setting expectations that can't be fulfilled. So even one franchisee can hurt the whole system. I think it's important to note that from the franchisor perspective, the franchisors should always remember that franchisee profitability should be your #1 concern. Without the profitability of the franchisees, there aren't royalties, and there's not a way to expand the system or to make the system better. The franchisees should make their #1 concern compliance. They owe it not only legally to the franchise agreement that they're signing, but also to the existing franchisees that they're joining, who maybe have worked within this system and have been very successful in the system. And now they're having access to it, and again, the compliance should be that main concern. Why is non-compliance so bad? So non-compliance is more than just not providing financial reporting. And it could also be providing inaccurate data. It's important that a franchisor demands regular financial reporting and requires regular bookkeeping and accounting by their franchisees. A franchise system could face anything from inaccurate information in their FTD, like I had mentioned before, by just one location not complying. And this could lead to inaccurate expectations. It could lead to new franchisees and a lack of trust in the brand. It could even lead to a lack of trust in the franchisor vision as a whole. And when it comes to financial reporting requirements, one thing to look at is a tool like Qvinci is a very powerful tool that you can have in your arsenal by automating collection, consolidation, and reporting of franchisee financials. We give a franchise system up-to-date, accurate picture of the financial health of that system. It's not from data that's in arrears. And so when you're talking about compliance and non-compliance and where things can go askew, one of the things that you would look at is a tool like Qvinci or anything that's cloud-based, where you can take advantage of the technology, not have to do something manual, and free up those resources to building your business or growing that particular business, growing your particular brand. When you talk about non-compliance, also, there are greater challenges as a result of non-compliance than just the legal ones, and these could include anything from erosion of the actual system that maybe a franchisor has worked so hard to build. One of the things that that non-compliance is it's actually a symptom of maybe a bigger problem, and that problem is non-compliance is a clear indication that at some level franchisees feel disconnected from the franchisor, whether it's not having a voice or involvement in system changes. It could be a perception of not being treated equally with peers. The fact is it's an erosion of goodwill, and it's begun, and it's really the job of the franchisor to put this right. Now, this can be made even more difficult by things like the joint employer rule, which dictates what type of influence, both direct and indirect, that a franchisor can have and still be labeled a franchise system. So we're going to go through some of the things that can lead to this, and how you can avoid it and how you can fix it after. But more importantly, developing, there's two real relationships between franchisor and franchisee. There's the legal relationship that's outlined in your franchise agreement. Then there's the operational relationship, which is really your culture and your relationship with those franchisees. A strong operational relationship, one where the franchisees are buying into the culture, buying into your system, and utilizing the pathway to success that you've laid out, and complying with the system. That strong operational relationship is the best way to avoid the negative legal relationships in the long run. And how do you get there? Well, quite honestly, and this is the first of many times I'll say it, being open and transparent about why you are heading in a certain direction, why certain changes are being made. It's important to include the franchisee and give them a voice in this process. And by no means are we saying, hey, it's a free-for-all and let the franchisees dictate. In fact, it's not even a democracy. But it is important that their concerns are heard if you want to maintain compliance and maintain franchisee satisfaction. The reality is that there is a clear link between franchisee satisfaction and profitable growth of a franchise system. And that leads into everybody staying goal aligned, being able to implement changes and technologies that will assist the entire system. The truth with a franchise system is it's ever changing. It's definitely not static. It's fluid in every way, and needs and expectations will change as the system changes. And so without having compliance, you could result with a system that's out of alignment, not moving towards the same goals. It could even be at cross purposes, for that matter. One of the things that non-compliance tells you, outside of the disconnect between franchisor and franchisee, is that if a franchisee are operating independently and on their own, they've walked away from the path to success that you've laid out. And so this is a problem where they're now free-floating, and that doesn't do anything for the franchise system or the brand. In fact, you could have their business goals in complete out of alignment from the brand goals that you've set forth. So making sure that we have compliance is a big issue. And we'll go, when we jump into the FDD and how to build a better one, we'll actually show you how Qvinci can help you build not just a better FDD, but show you how we can foster that compliance across the board. So how do you facilitate compliance? And the big word here is transparency. Open communication and transparency from beginning to end, whether it is with existing franchisees or prospective franchisees, is essential. And because you want transparency in that communication, one of the things that you also want to do is make sure you have checks in place. And what we're calling this is really building a culture around financial performance. And what we mean by that is There are financial expectations that the franchisor has of the franchisee. There are earnings expectations that the franchisee has after looking at an FDD and an item 19. The long-term health of the entire franchise system is ensured when you maintain the standards and you eliminate the non-compliance. Franchisees fully expect that a franchisor is going to maintain consistent brand standards throughout the system. They know that the franchisor is doing things to help the whole system. The franchisor, so long as they don't forget that the profitability of the individual location in the unit is important, regardless of the size of the system, keeps everybody aligned towards common goals. In addition, franchisees should be part of the process, and whether this is, adding them or measuring franchisee satisfaction, whether it is, getting problem children to either comply or even closing down the stores that refuse to comply. It could be any of those. You'll get a lot more respect, credit, and buy-in from your system as a whole if you close the locations that break the rules consistently. Then you'll get buy-in from existing franchisees that see that these particular locations are forcing you to compromise your standards. There's a great story that I read recently where a franchise was under new management per se, and the whole system. And the first thing the guy did was he contacted all the franchisees and said, "What do we need to fix?" And that's a powerful question, but it also requires a lot of time and commitment on the effort of the franchisor. But immediately, the franchise system bought in, because prior to that system hadn't been included in any of the changes or in any of the direction overall of the brand. And now they were being asked of where the issues were and how do we fix them and what do we need to do. And that requires a level of commitment that is consistent on the part of the franchisor. To get compliance, you may have to do something like adding peer groups or advisory councils. A lot of franchise consultants will tell you if you don't have one already, you may want to start a franchise advisory council before you need one. This is a way for franchisees to feel that their voice is heard. And this is important in that it will increase their engagement in the system if they feel like their voice is heard. If you involve the franchisee in the solution process and ask them to evaluate or test out new technologies so that they can, they're able to maybe help it roll out or bring on late adopters in the system. It's like I said, it's not a free-for-all, but if you give an engaging way for the voice to be heard, all you're doing really is involving your franchisees in the direction of the system and increasing their buy-in and compliance. A lot of times when you're looking from a franchisor perspective, you have the brand and you're trying to grow that, and you have specific rules in place to grow that, and those are you're expecting the franchisees to follow. And it's letting go of some of those things in the system that actually increase that buy-in. Franchisees don't want to run the system. They want to run a successful business. They want to know their voice has been heard when there are decisions that are affecting them are being made. And so when you add this to open communication and open dialogue with the franchisor, it makes it real easy to show why decisions are made, why changes are necessary, and how you are building a strong operational relationship, which only strengthens the franchise system. So now we're going to jump in a little bit to some specifics, and from here we're going to take a look at the FDD and do an overview of that, and look into transparency in the item 19, as well as why an FDD needs an update, why there are people listening to this webinar right now that probably need to update their FDD, and what the results of a weak or out-of-date FDD can mean to your system. So your franchise disclosure document, your FDD, is the content of that document is your first best opportunity to lay out how a franchise will operate, rules for compliance, how often a franchisor will follow up and maintain the standards and policies aimed at that system's success. A strong FDD needs to include marketing spend specifics. It needs to include financial reporting requirements, royalty collection procedures. Those are the basics. But it also needs an item 19. And this is where, the item 19 is where you accurately tell a franchisee your financial story, good, bad, and ugly. A strong item 19 is going to have not just a high-level picture, but it may break out franchisees into specific categories within the system so that you can clearly illustrate tenure, so that you can look at things like time to your median unit performance, or how long it takes for return on investment. It should include both gross and net numbers. In the past, it's been a problem with FDDs, and that they put their best foot forward, only including top performers, or massaging the numbers to give the strongest picture painted. And while that may sell you a lot of franchises, what it also does is it creates an expectation that among the franchisees or prospective franchisees that level of performance is there when it may not be. And so transparency in an FDD and item 19, it really does just help increase your compliance. It gets everybody on the same page. It gets them on the same page as far as reporting goes. It gets them on the same page and what expectations are. Now, if you're open and specific about things like reporting requirements, if you're saying that here's the reason why we collect this specific data and how we're going to use it to improve the system as a whole, I think you're going to get a lot more of franchisee buy-in than you would from the us and them mentality, which is dictating from the chair at the franchisor level and saying this is what the expectations are, and we expect this performance within a certain amount of time. Realistically, with the franchisor, they've got a couple of responsibilities as it relates to the item 19 and making sure that a clear picture and clear expectations are relayed there. Number one, you want to make sure that the data you're collecting and the reason for collecting it are all made clear to not only your existing franchisees, but your prospective franchisees. And do it as early in the process as possible. Implementation for new technologies and buy-in are a lot easier when this is presented at the front as opposed to after the fact. Franchisors should also commit to making it as easy as possible to submit data to facilitate collection, analysis, and implement improvement strategies. It should be easy for the franchisees to share data, to understand how that data is being used, and how they can use it themselves. Now, this is where Qvinci, as a tool in your arsenal, is such a powerful solution for any franchise system. And what we're going to do now is we're going to take a quick look at Qvinci, and I'm going to bring that over. And this is our demo page, and specifically as it relates to an item 19 and giving a financial picture of your organization, we're going to take a look at one of the tools in Qvinci, and that is our benchmarking tool. And what you can do with this in building your item 19 is you can look at your entire system, which in our case incorporates these 25 locations. And we'll look at, say, a P&L, and we're going to look at the last two, let's say the last 2 calendar years. We're going to compare every location to our average. We'll go ahead and turn vertical analysis on, and we'll look at percentages as well as numbers and build this report. Now, the reason why this is important is now what you've created is, here is an average over the last 2 years of your entire system. And this is as up to date as the QuickBooks for each location reporting. So now you can go in and you can disclose in your item 19 an average of the past 2 years' performance, and it's dead on. It's as accurate as the last reporting update that you had. Furthermore, if you wanted to look at the average or break out particular groups within this group, you can go to filter locations, and let's take a look at, say, tenure as a group. We only want to have, or we want to break out a group of just the stores that have been open more than 6 years. Say, for example, we know that 6 years is where we get back to the median group, or maybe that's where we get our return on investment, so we're going to go greater than 6 years. We'll apply that. And so now you can paint a picture here of these franchises that have been open the longest and how they compare to the average. Now you're setting a reasonable expectation with your franchisee as to how long it will take to get the return on investment. Maybe you want to look at particular regions. If, for example, you've grown as much as you think you can in the North region, but you want to grow in the South region, and that's where you're putting a lot of attention. So we'll clear these filters. We'll go to the South region. Now you can provide for prospective franchisees a look at how you're doing in that South region and how those particular locations compare to the average. Now this is from obviously a franchisor perspective, and it does give you the numbers that you need to have an accurate, up-to-date item 19, which is fantastic. But again, one of the things that the franchisor would want to look at is how does a franchisee themselves use a tool like this? And we're going to go ahead and show you. So let's say, just for the sake of argument, that I own in this franchise system the Texas stores. And I want to see how my stores as a multi-unit owner, how they compare to the best in our entire ecosystem. Now, you wouldn't go in and actually have to click these. If I own just these 5 stores, what I would see would be this anyway. So what we're going to do is we're going to go back to reporting and take a look at our peer benchmarking. We're going to compare my 5 stores to the top 10% in the entire ecosystem. And this time we're just going to look at percentages. So now I have the top 10% listed here, and then each of my stores. Now I can look at this and I can say, for example, expenses. I can look down here and I can, against the top 10%, my expenses are right on, so that's good news. But say, for example, all of my expenses were high here. I can now look at this and I can maybe pick a single vendor and say I want to order as a block for all of my locations. I may be able to test drive certain vendors or test drive certain advertising in particular cities and see what's the most effective from an expense standpoint. I can look at maybe the car and truck sales here, and maybe this tells me that I get a whole lot more out of my Ford sales than I do out of my Nissan sales, and maybe if I move a salesperson from one to the other, it turns my profitability into a much higher percentage. But this is usable, actionable data that a franchisee can look at and just in a simple comparison, make some business decisions that affect their bottom line. So this is a tool that they can use as well. You know, it's important to look at unit level data. You know, the strength of a brand is really in the economics of each individual location or each individual unit. And one of the things that you can do as a franchisor is you can actually make unit level data available to your entire system. With Qvinci, you can actually do it anonymously. Any franchisee, whether they own one location or whether they own 5, like in this example, can compare themselves anonymously to that top 10%. It's as simple as running the peer benchmarking report like we did. Now, the top 10%, we don't know which 3 stores are making those up, and so I'm comparing myself anonymously. Nobody can back into my financials, and I can't back into anybody else's. But I get the benefit of looking at the successes looking and seeing how a particular successful system is run, and then matching what I do to that system. So on top of the path to success that the franchisor has laid out for me, I can use Qvinci now and look at some specifics. How can I get over certain humps, whether it's in a cost of goods, whether it's in an expenses, or moving people around for a greater profitability on income. Now with Qvinci, in sharing this system-wide, there are other tools that we have that also can help foster compliance and collaboration, really, between franchisor and franchisee. And one of these tools that we are going to look at is our ranking report. Now again, I'm going to have the entire system here. Here we go. Just going to take a look at the ranking, and we'll do this calendar year to date and build the report. Now what this shows is on the left-hand side is each location, and it has some basically high-level or generally accepted accounting practice categories here: total income, gross profit, total expense, etc., gross margin, expense margin, net income margin. And it shows you the dollar amount and where that particular location ranks. So from a franchisor perspective, I can look at this and I can say, okay, how do I get that Austin store to move from closer to the bottom of the pack and get them to increase that total income and increase their gross profit, but maintain that expense margin where they're doing really well, or their total expense where they're also near the top. So how do I move them up the needle or up the ladder as far as the income goes without hurting that expense piece? Again, you want the tool to be able to be usable by not just franchisor, but franchisee. Interesting story here as I go ahead, and I'm just going to pull one random location and say I own the Clinton store, the Clinton location. I go into the ranking report and I see that, hey, I am #1 in total income, #1 in gross profit, but total expense I am dead last. And the reason I bring up this example is this actually is based on a real life story of a Qvinci customer. They saw that they were actually, ran a ranking report, saw that their location was high up as far as income goes, but close to the bottom as far as expenses go. And what they did was it forced them to reach out to their franchisor, having open communication already set, and say, how can I fix this? Where am I going wrong as far as having this high level of expenses? And again, it's giving me that high level of income, but how do I maintain this and make this better so that, again, my gross margin, my profit margin is thereby increased? So what they've done is it basically opened a line of communication that wasn't there. It had collaboration all over it, and again, now we have a system where best practices, if it works for this franchisee, there's nothing to say that it won't work for others, given the same market factors are working on with the same franchisees. Again, we know that that location may be different, and there are different economic factors there: population density, how long you've been open, etc. But all things being equal, this you could take a look at something like this and really foster an environment of collaboration and really sharing of best practices. Now, what this gives you, and what Qvinci gives you as a whole, is it's a way to positively affect your bottom line, increase collaboration, increase healthy competition, and by giving you the tools to learn from others, you can not only copy their successes as a franchisee, but you can also learn from their mistakes without having to make them yourself. As a franchisor, this is perpetuating that transparency that you're looking for, and it shows your franchisees that by giving them tools like this, where they can not only see it for themselves, but readily see what they need to do, a clear path to greater success, shows that you have their best interests at heart. So what I'm going to do now is I'm going to move this off, We are going to look at a couple of other parts of Qvinci as we go forward, but the next thing that I wanted to talk about was why your FDD needs an update. And the reality is that your FDD needs an update whenever it no longer accurately represents the financial status of your franchise system. An outdated FDD can lead to misrepresentation, unrealistic franchisee expectations, unrealistic franchisor expectations. It can then go forward and get a little bit more sinister, where you start to see shrinking in your franchise environment, locations closing. You could see a lack of brand confidence, and again, start seeing non-compliance, meaning there's a disconnect again between franchisor and franchisee. And once you have a loss in the brand confidence, then you're getting into negative legal ramifications and eventually the demise of the system. So it is important to make sure your FDD is updated. And again, the franchise system as a whole is fluid. It's not static. And so your FDD is going to require updates, whether that's yearly, whether it's more than yearly. The nice thing with a tool like Qvinci is you can update it as often or not as you want. We're giving you up-to-date financial information from which to base that item 19 and build that stronger FDD. Now, when you don't have an accurate FDD, you're opening up your system to some other things, like stifling governmental regulations. And as an example, I'll throw out joint employer, because that is one that really is limiting from a franchisor perspective, in that it talks about direct and possible indirect influence that you can have with your franchise system and still be classified as a franchise. You know, the best defense against this type of regulation is transparency in your FTD, accuracy in your item 19, and by maintaining these standards and again looking at them consistently and looking at them often, you really have the one and only defense against things like joint employer or being labeled as joint employer, when in fact it's a franchise system. When you equate something like Qvinci with this, you know, Qvinci is probably the best tool on the market to achieve transparency, to foster compliance, and trust across your entire ecosystem. It shows that you can, again, compare yourselves anonymously against the best. Shows you how you compare against the average. And again, you can break that out into even more specific groups and have true apples-to-apples comparisons. What does that do? Well, it fosters healthy competition. I don't know of a single franchisee that doesn't want to be more successful. And so by looking at the best practices of the best in your environment, you can follow that lead and create that success for yourself. Up-to-date data from Qvinci allows both the franchisor and the franchisee to identify performance issues before they become problems. It allows you to collaborate, share ideas for improvement, like with the example that we had with our customer who took one look at his ranking report and says, I got to fix these expenses. And he went right to the source, went to his franchisor and essentially asked for help. So how does Qvinci help? Well, like I said, 24/7 access and up-to-date financial data. And again, it's as up-to-date as your QuickBooks. And this is from a franchisor and franchisee perspective. This is where regular accounting becomes so important. It is important, and how you do this in your franchise system is completely up to you, but it is important that regular, generally accepted accounting practices are followed. For example, I would say at the very least you should be doing weekly accounting, but daily is probably preferred. And the reason why we say that is if you go throughout the week and from your point of sale system, you're getting all of the sales and the income associated to it, but what you don't have is your cost of goods, maybe because expenses haven't gone in, maybe because you wait until Friday every week to do expenses. And while this is generally accepted and does happen a lot in the franchise system, the reality of it is that you have a much greater chance of forgetting an expense or losing a receipt in that week that you're waiting to add your expenses than you would if you added them as they occurred. And so by that note, you want to stay on top of the accounting practice. And that being said, the great thing with Qvinci is, and why it is such a powerful solution, is that from a franchisor perspective, really all a franchisee has to do is keep their books up to date. And when it comes to consolidating and getting all of that, putting it in a usable form, Qvinci does that. We can produce things for you in a matter of seconds. So what I mean by that is, let's take a look again at the tool, and we'll go back to our reporting page. We'll make sure that all of our locations are up and in here. What we're going to do is we're going to look at a P&L, and we'll look at it. Let's say by location, and we're going to look at, let's say, the last 12 months. And we build a report. Now you have each location and their P&L right here. So instant, provided the accounting is up to date in QuickBooks, in Xero, whatever the accounting system is, we can give you an almost instant P&L. And if you look and you wanted to see what your entire system was and the totals, here you have consolidated totals for the entire system in the very last column. So now you've got automated collection consolidation of franchisee financials, and really they did nothing different other than make sure their books were up to date. So return on investment from a franchisor perspective for something like Qvinci is almost automatic. You have franchisees that are able to comply and not have to worry about pulling all these different reports and data and from all these different places, trying to consolidate it themselves manually, and decimal points being in the wrong place, and all kinds of other errors that can happen. This automated system is something that's accurate. This improves efficiency. This makes it easier to update your FDD and to do regular maintenance on the FDD. And again, with something like this, how does this make compliance easier for a franchisee? Well, again, franchisees know that there's a reasonable expectation for financial reporting. It's part of every FDD. But if you can give them the time that it used to take back, and let them use that time now to actually grow their business or to pursue real changes that can affect their business positively, and then turn around and share those best practices across the whole system, you've strengthened your brand overall. And this is what a tool like Qvinci does. Again, it helps to foster that compliance by giving the franchisees a simple, easy to digest set of information that shows a clear path to success. So benefits for Qvinci. Number one, you're building trust by keeping everybody on the same page, and again, moving towards common goals, which in this case, like I said at the beginning, was growth. With Qvinci, because we're agnostic as far as the accounting system goes, franchisees can use whatever accounting system that is their favorite, whether that's QuickBooks Desktop, QuickBooks Online, Enterprise, if it's Xero, if it's Excel, if it's MYOB. It doesn't matter to us. We can link and sync with it and give them the benefits of our solution. How does this help? Well, it does foster positive relationships between franchisors and franchisees, because if you automate this process, no longer will you have a situation where maybe a franchisee is late with reporting, unless they haven't updated their QuickBooks, which is an easy call and fix. So by improving those and strengthening those operational relationships, like we said, you're essentially strengthening your culture as a whole, and that again will help bring in additional prospective franchisees. Because if you have a franchise system where not only are your franchisees involved and have their voice heard in the decision making, but they understand why you're collecting a certain set of data, the reasons behind it and the changes that you want to make. Well, you've got buy-in, you've got codependency, and you've got franchisees that will sell to your prospective franchisees. It's important with an FTD and with an item 19 to use something like Qvinci to give you the actual picture. And by that I mean, in the past with item 19s, it's always been, you put your best foot forward, or again, the data was massaged to show maybe just top performers. And the problem with that is that tells a story that may not actually be the case. And so you want to base your strategy and base the things that you change or the improvements that you're trying to make on actual data. You never want to tell a story that isn't actually there. And again, with Qvinci, you're able to share unit-level data system-wide anonymously. So we looked at benchmarking, we looked at ranking. We do have a forecasting tool and Custom Report Builder. And with Custom Report Builder, instead of showing that to everyone today, I'm actually going to direct you to a webinar that is on our website. And it is how to get the most out of Custom Report Builder. It is a much better explanation than I could give you in this short amount of time that we have here. But I do want to make note of a couple of key Qvinci features. First is the forecasting piece. By looking at where you've been over the last 2 years, we have a tool called Proforma. And I'm going to bring that up here. And what Proforma does is it is a best practices forecasting tool for you. And what I mean by that is Qvinci, and we are linking and syncing with data. We go up to 3 years of history, 3 years up to date as far as data goes. And what we do is we take a look at the top 10% in the system, and from the pattern of growth or shrinkage or whatever the franchise system is doing in that top 10%, we actually will give you targets for each individual location. If they wanted to be like that top 10%, we can give them a target to hit and where we think they'll end up. And here's what I mean. If you take a look here, now obviously we don't have the data syncing, but what this tells you is over the last 2 years to date, so in this case it would be roughly about 30 months, the top 10% have basically given an income target in June of 25,000, and that is again based off of whether there was growth or shrinkage or whatever it was in the system. And what this tells you is that as of today, trying to hit that target, which would put me in the top 10%, where am I? Well, because we don't have any data in there, you're at 0, and the variance so far is this. But let's take a look at June in 2015 and how that really looks. So the target that was set in June of last year was 25,650,143. Throughout the month of June, I was able to see that I was actually going after that target and where my run rate, where I was projected to go given where I was at the time, etc. Green obviously means I'm going to hit that target and surpass it. But as you scroll down, when you look at things like expenses or cost of goods, I was red there. So I went over a threshold that I'd set. So, as I look at it this year, I may want to, in June, take a look at those expenses or take a hard look at them and try and limit that as I keep that growth number moving forward. One of the tools that we give you outside of this forecaster is we give you a set of alerts. And this is important because what you can do now is you can take a look at that forecasting piece, see where your targets are, see what thresholds you're comfortable with, and then set yourself up to manage those as they get close to whatever your target or threshold is. Here's what I mean. If you were to go down here and you say in the month of June you didn't want to go over a certain dollar amount as far as, say, let's call it, not payroll expenses, that's going to be, let's say, advertising. What you can do is you can actually set yourself either a daily or weekly alert, we'll say daily, that gives you month to date what your TV advertising expenditure will be, and you can actually get the target, or you can set a target for yourself or set a threshold, something you don't want to go over. Put that number here, say it was 2,500, and you hit save. And what you'll get is, you'll get a daily where you are in comparison to that threshold. You can get the actual number if you want. Where am I as far as TV advertising? I know I don't want to go over 5,000 or 2,500, but where am I right now? And you can get that monthly email. So the alert system is set up that way so that you can monitor those expenses per location on a per location basis, as well as the franchisee. The franchisee can set their own alerts for their store. For example, if I was just the Austin store, I would see my location here, and I just want to know when my newspaper advertising expenses go over, let's say they go 5,000, and then I save that. Now, because I did it as a weekly reminder, what will happen is every Monday I will get that email reminder that tells me where I am in relation to that threshold. Again, I can look at the actual number, I can set a target, I can set a threshold. But now as I get closer to that threshold, if I'm really close to that 5,000, I'm only halfway through the month, I know that this needs to be managed. So again, another tool usable by both franchisor and franchisee. Again, something that from our standpoint is a requirement of having compliance, is something that is usable by both, something that Qvinci easily fills. Now, as we look at some other features, again, we looked at ranking. Unlimited logins is important. What Qvinci charges by is by the reporting entity or the financial reporting of a particular location or a QuickBooks file. And it doesn't matter if you have, if you're a multi-unit owner and you've got 5 locations and you have them all in one QuickBooks file, but you have them separated by classes, we can sync by class and get you the individual entities. If you're a single unit, or maybe you have 2 units and it's in 2 separate QuickBooks files and each one is its own, again, we can link and sync with those, and each one is a reporting entity. But the way that we charge for our solution is it's a dollar amount per month per reporting entity, or per year per reporting entity. That's $14.95 per reporting entity per month. If you go annually, it's $149.95 for the annual license for our solution, and you can pay that up front. It actually gives you a 2-month break by doing so. But we don't charge by logins, and this is important for a couple of reasons. One, from a franchisor perspective, if you're getting Qvinci for your entire environment, you can assign logins to your franchisees, to their managers, to anybody who needs access or wants a level of reporting. And because we have permissions set up where the franchisor can control what certain franchisees or certain people are able to see, you can make sure that people only have access to the information that they need. Now, the main key feature that we haven't explored yet is patented standard chart of accounts mapping. And this is where Qvinci won its patent last year. And basically, the patent covers dynamic mapping to a standardized chart of accounts. And by standardizing the chart of accounts, what that enables Qvinci to do is provide you consolidation that is up to date and accurate. It allows us to provide the peer benchmarking and again show you how you compare to that top 10% or against the average. And I'm going to show you real quick what that looks like. So when we go to our reporting and we pull a P&L for all the locations, I'll just do this real quick. This is year to date, all locations, again consolidated. What you'll see here is unmapped. So when Qvinci is onboarded, there are a couple of ways that we can get you mapped to a standardized chart of accounts. One of those is by using one that you already have in place. One of those is by using some templates that we have, or by having you whitelist keywords, things that you want together. With our dynamic mapping technology, we can actually get mapped roughly 70 to 80% of the chart of accounts and get everything in the right place. But you will have some things that are unmapped, and these show up when you run a P&L or something like a balance sheet, and you can actually take a look and go, okay, here's something that's unmapped. And this is something where you take a look at that, and it requires your attention at the franchisor level, because something is not fitting in your standardized chart of accounts, and this could end up being unrealized income. It could affect your profit margin by being an unrealized cost of good. As you can see, there's unmapped in every major category on the P&L. And so how do you fix this? Well, you simply go into Tools, and you go to Map to Standardized Chart of Accounts. And what you see here is under the income category, every location and the thing that is not mapping correctly. So what you can do, in this case, we're going to take all of these because these are all showing me that they are steering wheel income. So you can take all of these particular, you could do these one at a time. You could do as many or as few as you need to. But this is income. So where we want this to go is, we'll call it miscellaneous parts income. So I've clicked exactly what we want to map, where we want it to map. As simple as hitting map selection. Now what will happen is this will now map to the correct category in your chart of accounts, and going forward, the next time all of these locations sync, this particular category will now map to the correct place without showing up as unmapped in your system again. So with some regular maintenance to the chart of accounts, you can actually make sure that all of your data is up to date, accurate, and really painting the picture of your financial health that you need it to paint. And finally, what we'll take a look at, and this is real quick, but this is our sanity check. And what this tells us is, with our health check feature, what you get is a means to check up on the system. For example, what we're showing here is that with your balance sheet, there are 50 instances where assets and liability and equity are not equal. Now, I know some people will say that it's impossible for QuickBooks to send out a balance sheet that is not equal, but it does happen. And in this case, Qvinci gives you a way to check it and to fix problems as they occur. And these could be anything from a decimal point in the wrong place. It could be somebody transposing numbers in the bookkeeping piece of it. It could show you patterns that open the door for fraud. And so this is a way for you to check those, see if there are patterns there, fix them, and close the door on fraud before fraud occurs. Here's what we give you. If you click here for the details, what you'll see is you'll see the location, the month and year where the instance happened, and what we think the problem is. We do that for every instance where, again, the balance sheet is coming in unbalanced. This could be something as simple as somebody added an expense, or they found a receipt after the fact, and so they altered the books after maybe that they had already closed them for a month or for a quarter. Again, it does happen. This could also mean maybe an inter-store transfer of goods, and they didn't have eliminations done correctly. Again, it could also mean something along the lines of fraud. But whatever the case may be, this gives you a means to see those errors as they occur and fix them. Now, the reason why something like that would be important is not only is it something that from a franchisee perspective they can look at and build a stronger, a more profitable business, but the franchisor can then look at that and equate that to the strength of their brand. Now, with Qvinci, something that does come up a lot is security. And it needs to be stated that with Qvinci, when we are linking and syncing with your accounting system, we are not pulling transactional data. We're not pulling any fraud-sensitive data. In fact, we don't query any of that data. What Qvinci does is we only pull summary financial data to build our database, or your database, and to build the data from which you're going to get your actionable intel. We're hosted at Amazon Web Services, same place as QuickBooks Online, and Amazon Web Services carries every compliance that you can think of: Department of Defense, HIPAA, SOC 123, FIPS, etc. So with Qvinci, the combination of being hosted at Amazon plus not pulling any fraud-sensitive data really offers a level of security that other solutions don't. From a policy standpoint, us as a company, only senior level employees can access the database, and we don't pull, like I said, any fraud sensitive information. So no employee numbers, no credit card numbers, bank account numbers, any of that. Audits are performed and reviewed regularly by management, and we only go into the database with the permission of our customers. So now what? Well, what we'd like to do is, as you see here, it's a list of all of the account executives at Qvinci. It also shows the particular industries that we cover. For example, Roman, he covers home services, food and restaurant, banking, etc. Caitlin, health, beauty, fitness, property management, pet services. I handle children and education, cleaning, restoration, entertainment, recreation, and Marty is automotive, business services, retail. By all means, any questions that you have that come up after we've closed out the webinar, feel free to give us a call. Phone number is 512-637-7337, and you'll be prompted to hit sales, and you can get to all of our extensions that way. If you can call into the general line, and obviously we'll pick up and answer any questions there as well. So now what I'd like to do is go ahead and open it up for Q&A and answer any questions you have or any concerns, or elaborate further on anything that I've shown you. I want to thank everybody for joining us today. Again, we're open for questions, so fire away. I'd be happy to elaborate or show you in more detail anything that we touched on today. I think again it's important to remember that you know there's places on both sides that again are working towards that same growth goal, and it's important for you know, a franchisee to comply as one of their number one concerns, and not only because of the legal ramifications there and the franchise agreement that you signed, but more importantly, it fosters again a level of collaboration with the existing franchisees that have already bought into the system and have been compliant. From a franchisor perspective, you know, without the profitability of the franchisee, there really isn't a reason for the franchisor to be around. So it should be very high on their level of concern, you know, what the franchisee profitability is and how fast they can get there. Again, how satisfied are your franchisees with how things are running? A great way to gauge the effectiveness of your brand and gauge the compliance and how effective you are in relaying that is, hey, run a survey and find out from your franchisees how satisfied they are. What do they think you need to fix? You know, provided that they have a voice and are able to have open lines of communication with you, I think you'll basically get compliance without any pushback. It's, you know, it's a system where a franchisee is really left out without a means of communication, without transparency, where they begin to wonder, you know, what are they getting for those franchise fees? What does the franchisor have my best interests at heart? And again, this results in really a system that is not aligned and doesn't have common goals and is really, for all intents and purposes, working at cross purposes and really acting in self-interest instead of brand interest. And I think with something like Qvinci, a tool that can help foster this type of collaboration and compliance just in the financial reporting aspect of things, and give a way to share best practices, you've got a tool that can make your franchise system stronger and more successful. Again, thanks to all for joining. I'm going to go ahead and close out the webinar. Feel free to call us again. Phone number is 512-637-7337. If any questions pop up, we will leave the chat open for a little bit longer if any questions do arise. I thank you for attending. Look forward to the next webinar with you. Have a great day.